Hi, I hope you have a pen and paper, possible to take notes or to write down your questions, because I will give you the opportunity to talk about those questions and ask them at the end of my training. Thank you for joining me, and we're going to get started here in the next couple of seconds. Looks like 12 seconds. But while we're waiting, I will actually pull up my screen share and get started. And it is 7 o'clock on the dot. Once again, thank you for joining me. Now, I've been training on this one pair of New Zealand USD, NZDUSD, for quite some time now. And we've been following it for quite some time. Now, if you take a quick look at this chart, you can see that it has gone, when we left it like yesterday, at a negative $12.08. Today, it has dropped to a negative $17.98. But don't despair. This happens all the time, and it can be seen on a weekly time chart. So I'm going to pull that up for you so you can see exactly what I'm talking about. And if you pay attention and look where the trade is right now, and being at a somewhat medium to high open to a high and a low. But it kind of looks like it could very easily be a sell. Unfortunately, I have a buy, and it's not a bad thing. My stop loss and my take profit and all the rest of it is still working quite nicely. So we're going to make it so that you can actually see the whole chart in the day chart. And you can see most people would be panicking right now. And why am I not? Because of where my stop loss is. My stop loss is actually at 4,000 pips. And I'll show you that right here. See? Negative 4,000 or $40. And I still have 517.07 in this account. It's came down 83 cents from the fees from day to day. You do longer than a 24-hour time frame, you are charged a certain amount to have that trade from the broker. It's just standard. It's how they work and how they keep you going. So my entry point is still a buy at a 0.01, meaning I only have a 0.01 in pip. So 1 is only 1 cent. That's why I can continue to do what I do. And that entry point price is 0.68310. My stop loss is at 0.64310, which is the 4,000 pips or $40. And my take profit is at 0.72310, which is also 4,000 pips or $40 on the profit side. And I like to keep my ratio 1 to 1. So I have a 1% or a 1 time of win and a 1 time of loss. They're equal. And that's how I'm able to continue to trade on this one pair for an extended time. Now I can pull out whenever I want, unless I have more than one. If I have more than one, this broker actually does a first in, first out, meaning if I do another one for like a sell, I have to get my buy out before I can get the sell out, regardless of if it's in profit or not. Can be pretty harsh. And I keep this low-keyed So it's not a lot to keep my margin level around the 2400 mark. If I get below, I would say 500, I start to panic. That's just me. Most people, they say you can get it below not below 100. That way, you're not what they call stomped out of the trade, because the broker takes a look at what you're doing and they realize that they're losing money off of you. So they're going to make sure you lose your money before they lose theirs. And when you're stomped out, that means the broker is saying, enough of this, we're going to take your money and run. And it's legal, because that's how brokers do it. That's what they do. So keep in mind that when you trade, you will only be using what you do not need to have. The amount you start with can be as quick and easy as $10. And you will compound it, extended time frame you're in the trade to build that amount. When I started this, I was at $280. And in less than 3 months, I'm over 500. So I've been compounding because I've been in the trade that long. Now, before long, this company could very easily take an extra 3 to 5 pips from me, or 3 to 5 cents, because it's been over the 24-hour time frame. It's not an issue. It's not a concern. Now, most people would say, but you've gone down negative over 500 pips or $5. Why aren't you panicking? Why aren't you getting out? Because my stop loss is at 4,000 pips or $40. I have plenty of room in here that I don't have to be worried about this. And my take profit at 4,040, like I previously stated. Now, most people would say, but how can you tell it's turning around? Well, I go in a higher time chart. And looking at the week, I can see the patterns that the trade's been doing. And it always turns around. It always goes the opposite direction. And I'm okay. We're basically right about there where the trade is right now. And from previous time, because when you trade right, but you look left. I can look at this and see that where the trade's at currently, I can say without a worry, hey, you know what? I'm up too high. There we go. But 2, it's going to turn around. And it's going to go up to where I want it to, because of the pattern that it's done previously. It is going to change and move the way I want it to. So there's no worry. Yeah, it can continue to go down, but it's what you call a resistance that it's hitting. It's hitting the wall of resistance. So it will figure it out, and it will test it and retest it and test it the 3rd or 4th time, but it will go back the other direction. And you can see that by looking left at what it's done previously. Even though it's been about 9 years since it was this low, it's not an issue. Prior to that, it was just 3 years ago. So that's why the higher time charts are necessary. Now we're going to go back to my day chart, because it's where I feel comfortable. And everyone is different where would they feel most comfortable at. But let's try something. What you think? What do you see on a minute? Not much, right? How about a 5 minute? See a little bit of a movement, but it's still not much. The 15 minute? Can you make a decision? You've got maybe the first paragraph of your book, of the story. The 30 minute? You might have the first page, but it still doesn't give you too much of the story. Then you have your first hour. You've got quite a bit that you can actually judge, but it's a little difficult to do without any indicators. No tread lines, no anything. So it's hard to do. The 4 hour is where I like to be at the latest, because I know what I can see and what I can do. Lately, I've been going up higher to the day chart. And the reason I'm in the day chart is because it's a longer trade. So the day is the least I want to go down. Then you have the week and the month giving you information that the whole story of the trade is actually going to unfold, the whole life of that trade. So you can very well see the patterns it's been doing and know that it is exactly what you wanted. Now I'm going to stop my screen share so that some questions can be asked. One moment. And welcome back. Now, I'll give you a moment or two to see if there's any questions you might want to ask. Going once, going twice, and gone. I guess it's a quiet day. So, keep in mind that on the 30th of August, which is today, we actually have about 2 weeks before the event starts in Fort Lauderdale. And you still have some time to get your tickets if you wish to attend. If you wish to learn more, build your education, you wish to expand your customer service to those around you, develop you before you can develop others. And the only way to do that firsthand experience is to get to the event. Know what's going on. See what people are actually doing, not just talking about. You need to see what they're actually doing. And believe me, it's going to be worth every bit that you put into it and more. Thank you again for joining me, and have a fantastic remainder of your day, and I'll see you tomorrow.